Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a bit about Form 8938 and some of the more important features or facts about why this form needs to be filed and how to file it. Looking at our history, it looks like we've been writing articles about top 5 lists for Form 8938 for several years, dating back to 2015. There's been changes, modifications, but overall, the concept has remained the same. It's about international information reporting. So let's jump into it. First thing, as we always do, who has to file Form 8938? It's only for U.S. persons. Now, persons can mean individuals, can mean entities, possibly controlled foreign corporations, even though they're foreign. They're primarily owned by U.S. persons. But for purposes of this presentation, it's individuals. 3 main categories of individuals: U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. Now, for a lawful permanent resident living in a foreign country that's a treaty country, they may be able to make a treaty election to be treated as a foreign person for U.S. tax purposes instead of a U.S. person. That would mean they file a Form 1040-NR instead of a 1040, and they may be able to circumvent having to file Form 8938. In addition, if someone's a foreign national who is only a U.S. person for tax purposes because they met the substantial presence test, if they don't meet it, or if they meet one of the exceptions, then they may be able to avoid having to file Form 8938 as well, at least in any year that they qualify for the exception. So what is 8938, right? So Form 8938 came into effect, I think it was 2012 for the 2011 tax return. It's similar to the F-bar when you see it, and we'll get into that in a little bit. The idea is taxpayers have to report foreign bank financial accounts, specified foreign assets to the IRS. Typically, it's going to be your bank account, investment account, pension, shares of stock, mutual funds, unless you're doing the 8621, other types of investments, life insurance that has a cash or surrender value. What FATCA is the U.S. has entered into these IGA, these intergovernmental agreements with more than 110 foreign countries, hundreds of thousands of foreign financial institutions who proactively report U.S. account holders to the IRS. The law is, it's lame, it's not really fair, it makes it very difficult for U.S. persons to go overseas and open foreign bank accounts, but currently it is what it is. The Form 8938 is a little different than other forms like the F-bar or the Form 3520 in that you file Form 8938 only when you have to file your tax return, and you do it when you file your tax return. So it's due at the same time. If you file an extension for your tax return, then your Form 8938 goes on extension as well. Conversely, you don't have to file a Form 8938 just because you exceeded the threshold if you don't otherwise have to file a tax return. Stated another way, don't just file a tax return to file Form 8938 if you're not required to do it. Anyway, so what are 5 important facts that you need to know about the Form 8938? Well, first thing is there's different thresholds to filing based on your status. So comparing it to the F-bar, for example, you have more than $10,000 on any day of the year you have to file. It doesn't matter if you're single, separate, joint, living in the U.S., living overseas in a spaceship, right? You still have to file it. With the 8938, if you're single, married filing separate, the threshold is going to be different than if you're joint. Likewise, if you live in the United States, the threshold is going to be different than if you're a foreign resident. Joint filers living overseas tend to have the highest threshold, $400,000, $600,000. Single taxpayers living in the United States have the lowest threshold, $50,000, $75,000. Unlike the F-bar, you have to have a financial interest. So for some forms, you have to file it even if you have a signature authority, things like that. For the Form 8938, you're only required to report accounts, assets that you have a financial interest in. They give a definition, it's a little wishy-washy, so, there's a lot of gray area, right? Maybe you don't own the account, maybe your parents put you on the account, your grandparents put you on the account. Do you really have an interest in it? It depends. Are you going to end up getting that money? Is that the goal? Or are you just on there because in case you need to access it only on their behalf? Well, then do you have a financial interest in it? Probably not, but it depends. As we mentioned, there is some crossover with F-bar. So the reason we mention F-bar so much is that the forms are similar, but the F-bar has been around 50 years. IRS loves penalizing people for the F-bar. 8938, not as much, but there is a lot of crossover. Accounts that you put on the F-bar may also be on the 8938. In addition, you may have some accounts that go in one form and not the other. So, for example, when it comes to the 8938, you may have specified foreign assets. Maybe you have a stock. Maybe you're in India and your great grandparents left stock to you. You have the stock certificates. They're not in an account. That's going to go in the 8938. It's not going to go in the FBAR because it's not in an account. Fifth important fact to know for those of you filing jointly: penalties are joint and several, which means they could go after the return, even if it's only one person's assets. The return is penalized, so both taxpayers could get stuck paying the penalty. If you're out of compliance for Form 8938, there are various options you have to get into compliance. If you're willful, you do the VDP program, but most people are not willful. Most people are non-willful, and instead they qualify for one of the non-willful programs. Here's the Streamlined Filing Compliance Procedure, Streamlined Domestic, Streamlined Foreign. They're both for offshore overseas accounts. It's just domestic means you live in the U.S., 5% penalty. Streamlined Foreign means you qualify as a foreign resident or you didn't meet the substantial presence test in one of the past 3 years, and you get a penalty waiver. There's also delinquency procedures and then possibly reasonable cause depending on the facts and circumstances. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.